What is up, everyone? Welcome back to the trading world. We're going to be reviewing price action today. Today was a no news Monday, and honestly, price action was kind of hard, but I'm going to be going over everything in detail. I'm going to be recapping every little detail of the market. Hopefully you find this helpful or enjoy it. If you guys are new to my channel, I cover the market every single day, covering how you can trade NQ futures. So if you like that type of thing, definitely consider liking, subscribing, follow me on Twitter, and checking out my completely free Discord. The link to that is in my bio. So, as I said, no news Monday. I don't know what this is, but I mean, it's not coming out at a specific time. So basically, it's like as if it's a no news Monday. So going into today, we had this giant not even overnight. This was a new week opening gap that got left here. So instantly my eyes go, okay, maybe we're going to want to go back and fill this because, as you guys may know, the market likes to come back and fill voids. And you can see how precise this actually ended up becoming, right? We ended up filling this new week opening gap perfectly. But it did not happen right away like I thought it might. And that is where I messed up with my trade, and I'm going to talk about it and then talk about how I would have changed it and what I would do better next time. So what I was looking at is I saw we had this 1 hour for value gap. We broke this low. We had this placement. So I was liking this 1 hour for value gap a lot. I marked this 1 hour for value gap out. And then I dropped down to the lower time frame. The aligned time frame with the 1 hour is the 5 minute. So come on to the 5 minute. And you can see right here that going into market open, we were retesting this 5 minute change state delivery here, right? And honestly, it would have been a little more smart to even try and take this one instead. But I took this one, and for a lot of reasons, I actually do not like this trade in hindsight. 5 minute change state delivery. You guys see what's wrong with it? It's not obvious enough we're ready to go run liquidity. So this is the trade I took. Enter on the retest. Guys, I was targeting, the bottom of this new week opening gap and then this consolidation here. I feel like I keep making the same mistake. It's just not obvious we're ready to go run liquidity. Versus, guys, you can see we have essentially the exact same trade just a little bit later, but this one actually works out. You see this? Liquidity sweep, accumulation. Let's make this darker here. And then we have, let's turn this down. Accumulation, right? Manipulation above this high. And then you can see when that happens, right, we get 5 minute change state delivery. When I measured this out, right, this is a much cleaner flow state model, much cleaner, because I mean, look at where I entered, right? I was entering honestly in a discount. My entry was literally in discount, actually. So that's the first thing, right? Is definitely not ideal. And also pay attention to where I entered, right? 5 minute change state delivery here versus how much higher up this one is, right? This is way better. And also, guys, if I measure this from standard deviations of this, look how precise this is, right? Perfectly down to the 4th standard deviation. So if you guys can't tell by now, the market's running off of these models. We call them flow state models, but they're really market maker models, right? They run from the change state delivery to the 4th standard deviation. And you see how perfect this is, right? And so this is the trade that if I was to redo it, I would want to take it like this, because clearly this is a lot more clean, right? Accumulation, manipulation of this high, and then I could just scale out all through here. And so I'm going to pull up an image of this trade, right? Just hang on a second. So open up the folder and let me drag it over. So here's the way I would do it, like if I was to take it again, right? Same exact thing, right? Or this is literally what we're looking at, right? Entry on the retest, down the 4th standard deviation. You can see how much more clean this trade is compared to the one that I took, which was this, right? You can see that, it just, in the moment, you kind of feel like, here's what I was thinking in the moment, right? I saw this 15-minute candle. Look how nice this displacement is, right? In the moment, I'm thinking, oh, wow, good displacement, good break of this low. So this 5-minute breaker, this 5-minute change state delivery should hold, right? But I think two important things about this trade that was a loss for me, right? Let's look at it again, right? Once again, I'm entering at a change state delivery and discount. Does that make really any sense? No, I'm entering at the change state delivery below the accumulation range. Does that make sense? Not really, right? It's a bad flow state model. I mean, in the moment, it felt good because of the displacement, but I actually don't think it was that good. And another thing you'll know is if you look at our time levels, right? Because 8:30, if you are trading the New York session, you want to use 8:30 as a reference point. It's very important that you do, because 8:30, it's going to basically, I'm trying to think of the word. It's like, if you're trying to trade the New York session, like the majority of the range of the New York session, you got to have 8:30 as a reference point. Why am I entering all the way this far below 8:30? Because 8:30 is where we opened, right? So I'm just getting a really bad entry compared to 8:30. And once again, guys, if you don't know, 8:30, so 8:30 is when New York session opens. And a lot of time, our optimal entry will occur above 8:30, right? The market will sweep liquidity into 8:30, into a premium, and then go lower. And so you can see this entry is actually above 8:30. Check this out, right? Remember our 5-minute change state delivery here? See how this one's above 8:30? And this one actually works out? It's a very subtle detail, right? But even with this one, right? This one, you're entering below 8:30, right? This one, you're entering above 8:30. Much tighter, tighter sweep versus this sweep right here. Not nearly as obvious as a sweep. Versus this is very, very tight, right? So, anyway, that's the trade I took, and that's the recap of it. Basically, what I would change is, I would not have taken this, especially the one that's further down, because, we're way in discount. But then moving on, let's look at some more trades. We have, there's a lot I want to talk about today, actually. So something I found very interesting about today is look at this propulsion block, right? If you guys don't know, when you have an order block and then another order block, so once again, order block is up close candles before a giant move lower, right? When you have an order block and then another order block that pushes into the original order block, that is a propulsion block. So I have this one marked out in red here. And I know this trade looks kind of mental, right? But I do think that it's kind of cool, and it kind of proves a point. So once again, here, so this gray box up here is that 5-minute order block. That dark box is the propulsion block. And you can see we have that giant accumulation range from before. We sweep equal highs and delivering out of the propulsion block. Once again, propulsion block, you're going to have very explosive moves out of propulsion blocks. Look how we respect. Look how we perfectly respect. We go. Look at this. Hit the change to delivery. Measure out this move here from low to high. Look how we perfectly hit that final 8th standard deviation. That is precision like you can't even imagine, guys. Like, genuinely speaking, that is crazy how precise that was, right? Not saying that this is something that you would realistically take, because obviously, we got to be realistic. But what I am saying is, look at how precise the market is, right? Propulsion block, 30-second change state delivery, and then this is just a giant stop run. I mean, very obviously. And so you can, this is what I mean when I say you can just trail your stop through here, and you just don't get stopped out this whole time as you're trailing your stop. So it's important to recognize, when are we actually going to have a good stop run, and when can we take advantage of that and trail our stop? Because when we can do that, we should. We should definitely trail our stop and be smart about it, right? But in general, guys, today was hard because look at how price action is, right? We're chopping up, down, up, down. Another thing I noted about today is it's a no news Monday, right? So why was I taking a trade expecting an expansion move when it's a no news Monday? When it's a no news Monday, trades on the lower time frame, they're going to be a lot more lucrative because it's higher time frame is going to be consolidating, lower time frame is going to be running liquidity. Versus if I'm taking, if I'm trading red folder news, that's actually a day I probably want to take a higher time frame trade because we're actually probably going to get expansion. Like I was saying, that 5-minute propulsion block trade that I was just talking about, that hit 8-1. I mean, I'm not saying I would necessarily have caught it, but it's crazy how powerful the lower time frame can be. And sometimes you just don't even realize it. But guys, just take a mental note. Lower time frame trades on no news Mondays can actually be pretty powerful. So anyway, then we have that lower resistance liquidity run. Then going into market open, I'm curious. I actually don't remember if we had a 2022 model here. I don't think it was anything obvious, right? Nothing super obvious in here. Once again, this is all kind of hard to trade in my opinion. We do have an inverse for value gap here. DNO takes that on Twitter. Let me see if I can pull it up. Okay, here's DNO. Let's go find this trade. So DNO takes this inversion. Right, he's a very simple inversion guy. And there's literally nothing wrong with taking simple inversions. And actually, arguably, sometimes I overcomplicate things to the point where I just need to maybe sometimes just take a simple inversion. But I also hate it when simple inversions fail because then it's it just feels like, I could have taken a better trade than that. And so, anyway, interesting he takes this with this giant wick, right? But, it works out for him. I'm guessing maybe what he does is he enters on the retest of the inversion. That actually might be what he does here because you see how he drew out the box. So he might have actually entered on the retest of the inversion, kind of like a Jan entry. So retest that inversion, and then we run up to buy side. So once again, you can still enter on after an inversion because the model's still valid, right? We inverse this for value gap. The model's still valid. It's not invalidated. So we can take a delayed entry, maybe a consequent encroachment of the inverse for value gap, or even, lower, right? It's genuinely, I call those the Jan entries, right? There's nothing, the model's not invalidated. If anything, you're just getting better, or at least that's the way I see it, right? So, let's look what else we had. There was something really cool about this, which is, I'm gonna pull it up here. Okay, actually, let's pull up this one, right? So, this is a giant, as crazy as this looks, right? We had a 5-minute for buy gap, 30-second change state delivery, and we perfectly run all the way down to the 4th standard deviation. And guess where we went from perfectly? Our flow state OTE part, flow state OT level. Once again, if you guys don't know what this is, right? You take the sweep, the liquidity sweep. A lot of time we'll backtest OTE, sometimes even before the change state delivery is confirmed. Now, actually, a lot of time it'll happen after the change state delivery is confirmed. I think this would be risky to take this, but I just think it's so crazy how precise it can be, right? We'll backtest that flow state OTE of the manipulation leg that takes liquidity, and then from the change state delivery to the low, first standard deviation hit, second standard deviation hit, third standard deviation hit, right? That would be kind of a hard trade to take. So the way that I would probably, if I was taking this for real, this would probably be the only way that I would do it, right? It's basically the video that I made about the turtle soup, right? Where we still have all this model valid. We consolidate here. So what's going to be above this consolidation? Stop losses, right? So we still have just a giant range here. This is a good short entry compared to the rest of this range. And so when we come up here, you know there's going to be stop losses. You can use those stop losses as your entry, right? Think like an institution. You're turtle souping into the change state delivery. And once again, you're waiting for the model to be essentially fully formed. You don't want to just rush it like, kind of like I did this morning. You want to wait for the model to fully form. We consolidate, soup this low into the change state, soup this high into the change state delivery, and then we run down to that fourth standard deviation. See how clean this is? And so if you can just have the patience to take stuff like this, dude, you're probably going to be so profitable. But, like, for me, it's kind of hard to do. But I wish I could. Like, I wish I could just, wait for this whole model to frame out. And then once again, right, let's say you didn't want to take this one. Let's say you wanted to take, there's another way you could have taken it, which is you could have taken it on this retest, right? This was the initial retest where we get the change state delivery, and this first one also worked, and we hit first standard deviation, second standard deviation, third standard deviation. We don't hit fourth, but still, that's why you take partials, right? You can see this would have actually, this would have been a decent run, and then obviously I usually trail my stop, and so the last part would get trailed out. This one would have been good as well. 5 minute fair value gap, 30-second change state delivery. And why did I like this 5 minute gap? Well, first of all, it's important to understand what the higher time frame was, because the higher time frame, we had this 1 hour gap and 1 hour breaker. So I'm going to pull that up. I have an image of that. Right? 1 hour gap, 1 hour breaker. We end up getting SMT. So then, we have this leg down. We have a nice 5 minute gap. This is like the only gap in this entire range besides all the way up here. But the reason I like this gap is the gaps that are, already used once are really good for flow state because it was already respected. So when we hit this gap again, it's a reused fair value gap. So this is gonna be a really good high probability flow state because we've already used this fair value gap once. So see how we sweep liquidity into the fair value gap and then drop down to the lower time frame, 30-second change state delivery, and you can see how precise this is, right? Liquidity sweep and 30-second change state delivery, and we get multiple, not just one, but we get multiple, one 3R and one 4R trade off of this just one change of state of delivery. It happens twice. Once, and then we run it up again, and they fill more orders at this. They fill even more orders at the change state delivery, and they drop it even lower. So this was a crazy model, and once again, guys, measure out this. Look at how we hit OT. The Jake trades at OT, right? So I thought that was cool. But yeah, before we even get the change state delivery, which is just crazy. But in general, guys, what I was saying about No News Mondays is, I should not have been trying to take a higher time frame trade on a No News Monday. I know, like, going into the market, I look at this move down and I see this displacement. I'm like, ooh, we're going to expand. But just hold up. It's a no news Monday, and we're at all-time highs, keep in mind. So why am I trying to short? Like, I should not have tried to short, but my lesson was learned, right? I also entered in a discount, entered the short in a discount, not super ideal. The sweep liquidity wasn't super obvious, right? We don't pop above this high. It's more of just a move higher and then a move lower. It's not like, this is much more of a pop, right? This is a lot better of a pop versus this is kind of just, we're getting candle body closes above this high and then back lower, and I don't like that as much. And then PM, we end up starting a low resistance liquidity run, higher. Now, I'm not exactly sure how you could get in on that. Well, there was one thing I noted, which was we had an SMT here, right? You can see SMT with this low and then with this low. Oh, and guys, check out, if I go on the higher time frame actually, what's significant about this? Zoom out, right? See this highest up close candle? That's going to be a very sensitive breaker, right? Drag that over. What happens? Very sensitive breaker. Very, very sensitive. We hold this breaker once, twice, then we expand. And also, it was the exact fill of the new day opening, or the new week opening gap, right? So, see what I mean when I say the market is super precise? And why is this breaker good? Because the highest up close candle before this giant move lower, that takes out this entire range, right? This is going to be a very sensitive breaker. Very, very sensitive. Because this liquidity sweep swept out this entire range. This is going to be a very, very nice breaker. So once again, why is this a breaker? Because it's low, high, lower low, that sweeps liquidity, higher high. And so, once again, the breakers can cut through candles. So, this breaker, if I drag this over, it's being held this entire time. Now, the bodies do close through that, but it was still held. And then we hold it again, and then we continue higher. Let's see if there's anything else. Oh, new day opening gap is kind of cool. And the new week opening gap, actually, you measure this whole new week opening gap. See how precisely we react off of these levels, right? You can split the new week opening gap into quarters. So 0, 0.75, 0.5, 0.25. See how the market kind of just bounces around between these? You can use this as a confluence, right? When you have a giant new week opening gap, you can do that. You can split it into fourths. And I meant to have that be the fourth one, but ended up being premium and discount. But yeah, in general, guys, I think Dodgy says it best. To end the day, I think Dodgy says it best. Let's see if I can find where he said it. Basically, it was a no news Monday. Likely no trades today. When we chop up or down like this, I don't take anything, feels dead. So no news Monday. We're definitely chopping around. A lot of things are failing. Like this inversion fails, but why does this fail, right? This 15-minute inversion, why does this fail? Well, 1 hour, first of all, does not inverse, right? Second of all, we actually, when we get this inversion, we actually get a bearish SMT. So that's another thing. And, yeah, I thought this inversion might work in the moment, but I think the more important thing was this 1 hour gap, still had not been inversed. And you can see that it still held price down and it was still respected. So that's why you really have to be careful when you do try and front run. Because the front run the higher time frame gap, because a lot of time you're just gonna get wrecked. So, but like I was saying, guys, today, difficult day to trade because just look at price action for what it is, right? Nothing super obvious, and you're probably gonna end up getting wrecked. So, you know, for the most part, stay away. Now, like I said, sure, there might be some trades on lower time frame. That's why, like, personally, on No News Mondays, I like looking for trades on lower time frame because I feel like you could actually, get a better move because you know that the intermediate time frame is just going to chop around. So the lower time frame is going to, run liquidity. I mean, that's what makes sense to me, right? So just a thought. Anyway, that about wraps it up, guys. We are at all-time highs, so, I should have been more careful with shorting, but yeah, I think that about covers it. Hope you guys enjoyed this video. Let me know how I can make these better, and I will see you guys in the next one. Peace out.